everybody, and welcome to Beyond Death and Taxes, the podcast where we unpack the only two certainties in life, and we try to make one a whole lot easier to deal with. We're your hosts. I'm Clay. And I'm Matt, and we're part of the team here at Avalara. Every episode, we'll bring you insights on tax trends, regulatory shifts, and automation strategies that are shaping modern finance teams today.
Because while death may be inevitable, taxes as well. At Avalara, we're doing everything we can to ease the burden of tax compliance.
Hey everybody, welcome back to Beyond Death and Taxes, the podcast where we explore the gray areas, red flags, and evolving realities of modern tax compliance.
I'm Clay.
And I'm Matt, and today we're diving into a topic that's often overlooked but frequently painful for businesses, consumer use tax.
Yeah, that's right. It's the side of tax compliance that doesn't quite get the same spotlight as sales tax, but it's a major source of audit risk, especially for finance and accounts payable teams.
And chances are, if you've ever dealt with vendor invoice errors, missing exemption certificates, or use transactions that slip through the cracks, you've already run into consumer use tax issues, whether you've realized it or not.
In this episode, we are pulling highlights from one of Avalara's most practical and popular webinars, Consumer Use Tax Explained, what it is and how to manage it.
Led by Avalara Product Solutions' Miles Metzger and David Nuff, this session breaks down what consumer use tax is, where it creates the most problems, and how automation can help teams get ahead of it.
But before we roll the tape, you know what time it is. Today, in the compliance graveyard, we are laying to rest the idea that you can just wait for auditors to flag your use tax issues.
Also known as we'll fix it if they catch it, aka one of the most expensive strategies in tax compliance.
Yeah, Matt, use tax liability builds up quietly through missing tax on out-of-state purchases, shifting inventory, or software that gets deployed in the wrong state.
That's right, and by the time an auditor flags it, you're often looking at multiple years of back tax, penalties, and interest, plus all of the time recreating a paper trail that you never expected to need.
So Matt, we're calling it. The audit will catch it strategy is officially dead.
Rest in peace. Long live proactive compliance.
All right, Matt, let's get into the real talk on consumer use tax.
You'll hear real-world examples, common mistakes, and a walkthrough of how teams can use AvaTax for accounts payable to automate and simplify use tax management, especially across AP systems, GL codes, and multi-location businesses.
All right, let's roll the highlights from Consumer Use Tax Explained, what it is, and how to manage it.
Let's meet today's presenters. Miles Metzger is one of our use tax product solution consultants at Avalara, and Dave the Knuff is also a use tax product solution consultant at Avalara. Let's go ahead and pass it off to Miles to tell us a little bit about yourself.
Thanks, Regina. Hi, everyone. I am Miles Metzger. Like Regina mentioned, I am a use tax solution consultant with Avalara. I'm a CPA and spent 10 years in public accounting and private industry, specializing in multi-state sales and use tax and multi-industry. I previously have worked for Baker Tilly, Deloitte, and a large chemical manufacturer in Wisconsin. With that, I'll pass it over to David.
Great. Thanks, Miles. Again, as Regina mentioned, my name is David Knuff. I am a use tax product solution consultant here at Avalara. A little bit of background about myself. Prior to joining Avalara, I did spend 30 years in public accounting, doing nothing but sales and use tax. I was with RSM. Prior to that, I was with KPMG, Ryan, and EY. Again, throughout my 30 plus years in public accounting, helping companies with sales and use tax compliance, are really focused heavily in the consumer use tax area. So I'm happy to meet everybody and looking forward to our discussion today. So today, what we're going to be covering in our agenda, we're going to be covering tax compliance in Avalara. Next, we'll be covering what is consumer use tax. Then from there, we'll be discussing how to manage consumer use tax. And then we'll finish it up with introducing AvaTax for accounts payable, tax compliance, and Avalara. You have a company in the middle with your vendors that you purchase from to the left, and the customers that you sell to are to the right, showing that there are two primary business functions of a business, buying and selling. We created our product portfolio to handle tax compliance around these two business functions, plus a few others. As a business, you'll need to register and obtain business licenses in jurisdictions where you have nexus. If your company's already been in business or operating for a period of time, You may realize that you already have Nexus, you had Nexus, and you didn't know that you had it, and you didn't register. We could help you get caught up by submitting voluntary disclosures to clear up prior liabilities. We could also help with your property tax compliance. As a seller on the AR side, you need to calculate and collect sales tax from your customers. In some cases, your customers may be exempt, so you may need to collect and manage customer exemption certificates. If you're selling globally, there may be a requirement for e-invoicing. Next, you'll need to file and remit taxes that you collected on your sales. And there are other supporting functions, like performing research to understand the taxability of your products and services that you sell. If you sell globally, you may need to assign the appropriate HS code so that your goods are classified properly for customs and duties. We have products for all of those. In order to assist you with all of these difficult compliance tasks, Avalara has several solutions. On the sales side, we have our core products: Avatax to calculate and collect sales tax, Exemption Certificate Management, ECM, to store and manage exemption certificates, Managed Return Services to help prepare and file tax returns, electronic invoicing and live reporting for those international sales. Along with those items, there are several supporting products such as tax research, item classification, cross-border for those international sales, and 1099 W-9 services. Other side of your organization also buys things. You're either been charged sales tax by your vendors, or you haven't, and your task is to verify and approve the taxes on those purchases. In some cases, your company may qualify to purchase tax exempt. So instead of collecting the exemption certificate from your customer, you're sending your vendor an exemption certificate. You may receive e-invoices from your foreign vendors, and you may also need to file and remit taxes where you are registered. In order to accomplish these tasks, you may need additional supporting services such as verifying classifications of goods, understanding taxability rules, verify vendor charge taxes, and digitally collect and file tax forms. In order to assist you with all of these difficult compliance tasks, Avalara has several solutions. On the purchase side, we have our core products: Avatax for accounts payable to verify vendor charge tax and accrue consumer use tax, Vendor Exemption Certificate Management to store and manage exemption certificates that you send to your vendors, Managed Return Services to help prepare and file tax returns, along with several supporting products and services to help you classify, determine taxability of the items you purchase, along with cross-border for international sales and 1099 W-9 services.
So what is consumer use tax? Now, I know most folks are probably familiar with what consumer use tax is on the phone, but for those that you might need a little refresher, consumer use tax is a tax that is owed by a buyer when they are not taxed the full amount of sales tax on a purchase by a seller. Always known as, the complement to sales tax, use tax is a mechanism that allows State Department of Revenue agencies to collect tax when the vendor does not have sufficient nexus with that state to be required to charge sales tax. The way I always think of, use tax back in the day is, prior to, Amazon being the giant it is today, a lot of folks would go online and purchase from Amazon and say, oh, I'm going to purchase online because I don't have to pay sales tax on it. Well, technically, everyone does have to pay sales tax on that. Since the vendor failed to charge sales tax, you as a consumer are liable to remit the full amount of use tax to the state on a taxable transaction. So what are some typical examples? Like I just mentioned, an out-of-state vendor that doesn't collect any sales tax, likely because they don't have sufficient nexus with the state, or they just don't really know enough about sales tax to charge that for you all. A vendor that's maybe not using Avatax or a tax engine, so they do not charge the correct rate from where that ship to location is. Very common that, vendors will charge, the incorrect rate, or they'll charge their home state rate and not the rate for which you are actually using that product. A purchase that was originally put into inventory for resale, but then instead consumed internally. Maybe you're a retailer and you take a table out of your inventory and use it for a storefront display. Or you're a construction contractor and you purchase everything for resale and are forgetting to remit some use tax on materials that are incorporated into your jobs. Purchased in one jurisdiction and placed into service in another. Very common that, centralized purchasing departments where we purchase everything at headquarters and then we're maybe shipping product to other office locations where use tax could come into play. And free giveaways and samples. This is an often overlooked area that if you have free giveaways, samples, very common in the beauty industry, construction industry, as far as, flooring, tiles, cabinetry, those free samples that are given away free of charge at a $0 invoice are typically subject to consumer use tax in states. And also, maybe you're moving some fixed assets around. Maybe you've got, a plant in one state or a server in one state and you want to move it to a different state. Depending on the state's rules, you could owe additional consumer use tax on that transaction. So what are some challenges when it comes to consumer use tax? I worked in industry for 10 years and my last company was a senior tax manager and handled use tax for 6 different manufacturing facilities in different states. We had about 400 million of fixed asset spend a year. So that's a lot of use tax when you think of that. And when you're one person and you don't have an automation process to it, it's manual, time consuming, and requires a lot of special skills. Unlike sales tax, use tax really can depend on the nature of the transaction, how you're actually using that transaction. If you're a manufacturer, where that purchase is actually used in the plant, is it used in the process? Is it used in warehousing? There's a lot of different complex rules when it comes to use tax that can really impact your bottom line. And additionally, integration and automation are difficult. Tax triggers can come from many sources and different data systems. I work with some customers that, they've got stuff in their ERP, but they have a separate fixed asset platform where use tax comes into play as well. So there's a lot of moving parts with this. And audit risk is very high when it comes to use tax. All my audits I participated in and assisted with in my years in public accounting, at the end of the day, the majority of the assessment was always use tax and not sales tax. So it's really important that you're managing this and don't want to come up with a surprise come an audit time. So here's a kind of a heat map of, what are all these different challenges when it comes to consumer use tax, capital asset movements, the self-assessment process in general, employee expenses and purchase cards. This is a huge area that I see in audits all the time where, folks are just, the vendor is American Express, but what actually goes into all those different transactions there? Auditors are looking for the data behind that to make sure sales tax is charged appropriately or you accrued use tax accordingly. We mentioned promotional items, invoices without sales tax, real property, capital maintenance, repairs, and all of that. That's a huge area of use tax. States have very different rules. Texas is one state that's very complicated when it comes to construction contracts and how use tax plays into that. So just take a look at this map, and if you have anything that you think relates to you, probably something that you want to make sure that you're on top of. Other scenarios that we have are, purchases from outside the use jurisdiction. For example, I'm based here in Denver, Colorado, but we have Avalara as offices, all across the country in different states. If I ship something to our office in Colorado, but then I got to move it to another office location, we got to think about use tax because that's when that really comes into play. A lot of times what I see too, when I'm looking at invoices in an audit is a vendor will charge just the state rate, but they won't charge the local rate or a district rate or anything like that. Those are additional rates that in most states you typically need to accrue use tax for the vendor that failed to charge any local rates. And one thing that's also very common is, paying the wrong use tax based on the location of use. If you're moving those items around, if you're not exactly sure where it is, all these factors can come into play. So we've got a scenario here that I want to walk everyone through. Something that's very common that I've seen in audits over the years, especially even more prevalent in this day and age, is software purchases. Software as a service, many states, depending on where it is used or consumed, will say it's non-taxable. California, Florida, Wisconsin, for example. Other states will say that software as a service is taxable. Texas, New York, Ohio. Those states, when we have a mixed bag of users across the US that are accessing software in states where it could be taxable or non-taxable, use tax does come into play. For example, in this, example here, we've got a software company that's headquartered in Los Angeles, California, where the sales tax rate is 9.75. They have also a West Coast Center of Excellence in Seattle, Washington. 62% of the staff of this company is sales support and personnel that is in Washington State. The vendor did not charge any sales tax on the invoice for Salesforce licenses, as their bill to and ship to on that Salesforce license was California, where software as a service is non-taxable. So we have that coming through, thinking of all this through as consumer use tax. We've got a vendor that did not charge sales tax, but we've got users in Washington where Washington State imposes sales tax on software as a service. So if we take 62% of our users, we get $465,000 of the total value that invoice is related to Washington, or then $48,000 of use tax is owed. Just illustrating how complicated this can be when you have a bill to ship to in software scenarios where it's the same and where you might owe additional use tax in states. Another change in disposition example that we have is a construction contractor. I work with a lot of construction companies where, they either purchase all their materials for resale and will try to remit use tax at the time where those materials go into that job. This can get very complicated, and making sure you're tracking your jobs correctly, understanding the state rules versus, a fixed bid contract and a time of materials. All things can come into play in that. In this example, we've got a company that's headquartered in Nevada. They had about $200 million in revenue. They do business in 4 states, but they do jobs in different states as well. So they were actually selected for audit by Nevada for 2022 through 2024. And the big issue that came up in audit was the construction contractor was issuing a resale certificate to purchase all building materials exempt from tax. What the issue with that was, when those materials were incorporated into the job or into real property where use tax is owed, as construction contractors are typically deemed to be the consumer of products, they failed to remit the correct amount of use tax to Nevada on those items. That ended up in about a $475,000 adjustment plus penalty. So this can get really complicated, which just illustrates that when it comes to use tax, we really need to make sure that if we're issuing for resale and pulling out of inventory, we have a process in place to account for that. Some other cases that are typically common in use tax are, free samples and giveaway items, incorrect taxation of shipping and handling. Some states will say if it's separately stated shipping on an invoice, it's non-taxable. Some states will say in their statutes that the shipping charge is deemed to be part of the retail sale and is taxable regardless if it's separately stated or not. Capital improvements are a huge area of use tax exposure. If you're, thinking of expanding, your offices, remodels, there's always use tax involved with that. Some states may deny a credit for sales tax paid if it wasn't a properly charged sales tax, and you could have to then remit the use tax on the entire transaction, which also ultimately can relate in a lot of double taxation in these cases if the sales tax charge was incorrect and you paid that. Special rules, obviously, for software, digital goods, especially in the world we're in today, that's only going to get more complex. And direct pay permits and multi-use permits are other areas to consider. with that, I will pass it back to David for our next section.
Great. Thank you, Miles. Next section here, how do companies without AvaTax for accounts payable manage consumer use tax? So overwhelmingly, the answer is with difficulty. Many companies will do nothing. Some will make a best guess lump sum payment. Others will have a manual process using spreadsheets to calculate their consumer use tax. And some may even hire a third party to perform an audit of their payables. What strategy works best for your company? Well, that depends. However, you should be sure to consider the following types of items. One, data capture is key. Making sure that you have all the information, all the data available that you need to make an accurate taxability on what you're purchasing is key. Consumer use tax needs to be designed around your day-to-day operations. You need a process, you need a workflow that follows and accompanies your day-to-day operations. You need to design your program to account for both business and law changes. As your company expands, as your company grows, as tax laws change, you need to be able to pivot and change as those laws and rules change, as well as business operations change. There are key documents that you will need to manage and maintain, like exemption certificates, just to name one. Again, the key point is to make sure that you have an audit strategy that prepares you for the inevitable next audit. Introducing AvaTax for accounts payable. AvaTax for accounts payable is Avalara's solution that can help your company to automate many of the consumer use tax compliance steps to save you time, money, and increase your accuracy and compliance. AvaTax for accounts payable is a hybrid design built to automate many of the steps in your current use tax compliance process. Connecting to us with either with a pre-built integration, a badged connector that we could connect to and do real-time calculations, an API, and or we can use batch transactions or import transactions to make taxability determinations. You can minimize your use tax liability by having our AvaTax solution determine what use tax is owed, or even identify if your vendors have overcharged sales tax and you may be entitled to a refund. Here's what AvaTax for accounts payable can do. It can help you to identify, calculate, and correct overcharged and undercharged vendor charged sales tax, because manually verifying tax rates on each incoming invoice can be impossible. AvaTax for accounts payable checks the rates according to jurisdiction, product taxability, and any special rules that may affect the sale. It identifies and corrects overbilled tax on purchases to keep you from overpaying. It allows a centralized configuration within AvaTax will apply to both real-time and batch transactions with our hybrid design. Avalara Accounts Payable has built-in rates and user-defined rules to define and determine tax obligations across multiple locations with complex transactions automatically. We can use our pre-built integrations or API for real-time use tax calculations. The platform provides a single location in which to view, act on, and report on purchase transactions. You can create a central source of use tax related data and maintain a clean audit trail of your self-assessment decisions. You can manage data from multiple transaction sources, run liability and expense analysis, and more without relying on expensive custom solutions. And then seamlessly, our solution works with other Avalara applications, including vendor exemptions, returns and reporting. And AvaTax for accounts payable is built into our unified Avalara platform where business applications work together to provide a seamless experience. No need to export information from one platform and upload it into another. Everything is in one single platform. AvaTax for Accounts Payable provides a centralized configuration where you can see all of your use tax rules and configurations. Our product gives you the tools you need right on the portal to manage how you want to manage your purchases, how you want to handle and manage your consumer use tax. So let's take a look at what that means and how we can start managing your tax compliance. Manage how you want your vendors to be analyzed for use tax. Our solution allows those types of activities to be managed, allows you to manage a comprehensive vendor list and implement taxability rules, including assigning product codes based on vendor information and linking to cost centers or general ledger accounts to help to drive taxability determinations. This works closely with our vendor exemption management product. You can add this application to send your exemption certificates directly to your vendors so that they can stop charging you sales tax on your qualified exempt purchases. You can also set up vendors to ignore those vendors that know that they charge you the correct sales tax, and you don't need to evaluate those purchases for consumer use tax purposes. You can create and assign taxability treatment of purchases using cost centers and or general ledger accounts. You can also assign tax codes or exempt use codes such as manufacturing, direct pay, resale, or other rules based upon specific types of transactions that you're looking at. We also have in this solution the ability to auto accrue use tax based on the variances and thresholds that you can set. This is built to support multiple point of use for situations like software that are being used across multiple locations. We also have the ability to set thresholds to prioritize high risk and low risk purchases. We can also automatically accrue tax based on thresholds for variance calculated. If you subscribe to Avalara's managed return service, our compliance group will take the consumer use tax that you calculated by AvaTax for Accounts Payable and put this onto the appropriate line of the consumer use tax return, whether that be a combined sales and use tax return or a return or a separate return, such as states like Ohio, where there's a separate sales tax return and a separate consumer use tax return. We help to make sure that we get that consumer use tax onto the appropriate return, and we summarize your use tax by taxing jurisdiction and identify overcharged sales tax by your vendors. Next, I'm going to turn it over to Miles.
All right, everyone. We are going to jump into a demo of the AvaTax for Accounts Payable solution. So AvaTax for Accounts Payable sits directly within the AvaTax platform. When we're talking about your consumer use tax function and how to manage it within Avalara, you'll be working within the Payables tab here. We have various tabs within here: transaction analysis, tax rules, and import transactions. Starting with transaction analysis, this would essentially serve as your internal dashboard to manage your entire consumer use tax function as an organization. You'll see we have many different columns here of the information that this dashboard will present. We have document code, date, status, vendor code, name, total amount, taxable, charge tax, calculated tax, variance, and unpaid tax. What this dashboard will do is if you are on one of our certified connectors, these invoices will come in automatically from your vendor bill module within your respective ERP or accounting software, or you will import them via Excel import file into the system so that we can calculate the respective use tax due to states where you have a liability. You'll see there's a bunch of different transactions in here as some examples of what the software will do. You'll see that, for example, we have some giveaways here. If anyone is in the giveaway or giving away free samples that needs to remit use tax, you'll see here that this was imported with no tax charge. It was probably likely removed from inventory and you need to self-assess on that. You'll then see that we calculated $140 of use tax on those transactions that need to be remitted to the state. What you'll also see is we're going to analyze the sales tax that a vendor charged you and look at where that bill was shipped to or used to then determine whether or not that sales tax amount was correct and if you need to remit any additional use tax. For example, in this invoice here, you'll see that the invoice was a total taxable amount of $1,000. The vendor only charged $50 and it should have been $70. So we're saying that there's a $20 variance and $20 of use tax that needs to be remitted to the state. On the flip side, we're also going to show you if a vendor is overcharging you sales tax. So a lot of folks have found this very useful because you can essentially use it as a reverse audit tool for your internal purchases to see whether or not you're overpaying sales tax on your transactions. You'll see here the vendor charged $54.23. It should have been $43.63. So we're calculating a potential refund of $10.60, which will be in an overcharge report for you in the reporting section of AvaTax. All of these transactions here question, how do we actually figure out how the tax is paid and what is taxable and what is not? That's all going to be managed in your tax rules within the payables tab here. All these rules here are going to account for how you manage your consumer use tax function and what should be taxable and what should be exempt. We'll look at your vendors from your ERP system and have those in our system. When I look at the vendor detail here, you'll see I can look into the vendor details and have your name and code that's going to match your enterprise resource planning system or your system of record that you're putting into AvaTax. You'll see here we have a vendor status. This vendor status allows you to assign a hierarchy of your review in the transaction screen that I was previously on. You can automatically set a certain vendor to be a vendor that you want to review each period. You can accrue tax on the vendor's transactions without reviewing them first. You can trust a vendor and we won't calculate tax. Or you can note that a vendor's purchases are exempt from tax and we will not calculate any additional consumer use tax on that vendor as well. What is also something to note in the system is that if you are purchasing from a vendor for manufacturing, resale, another exempt reason, AvaTax for accounts payable is integrated with our vendor exemption management tool. You can add on vendor exemption management to your accounts payable subscription, and you can manage all your exemption certificates for any purchases that you make exempt from tax directly in the platform. You can send a certificate directly to your vendor, and once that is completed, it'll appear in the system as follows and have your certificate here that you issued to a vendor so that you can purchase from them exempt from tax. We will then know on the AvaTax for accounts payable side that those purchases from that vendor are non-taxable. You're also able to set up cost centers in the system. A cost center such as field tooling, maybe it's manufacturing, maybe it's an inventory cost center, and you can assign taxability to that cost center based on whether it's for resale, maybe it's charitable, industrial processing and manufacturing, and anytime we would see that cost center come through the AP system, we would know to tax that accordingly based on the entity use code. You're also able to set up items in the system. For example, if your ERP uses an item code on the purchasing side of things in addition to your GL account, you can set up that item code and also assign Avalara taxability to those item code purchases. When that item code comes through, we then know how to tax that accordingly based on the Avalara tax code. And lastly, you can assign taxability to your general ledger accounts. For example, if I drill into this account here, I'll see that this account is set up for resale. Maybe this is an inventory account or a raw material account. I then know that when that GL account is booked to a vendor bill or comes through my import file into the system, that is for resale and tax should not be assessed on that particular item. Another feature that we have developed is an allocation feature within the software. Now, this comes very in handy this day and age as most software purchases are software as a service, and each state has different rules for how software as a service is taxed. What you as a user are able to do is set up an allocation rule for your software as a service subscriptions to then say anytime it hits this item code of Office 365 and a vendor code of Microsoft, I need to allocate my purchases for this transaction 40% Ohio, 30% to Indiana, 20% to California, 10% to Florida. And I'll show you on the transactions tab how that looks when an invoice comes through the system and how tax is allocated. You also have the option to allocate by cost center, vendor code, and GL account in addition to item code. You can add a condition that it's both. You can delete this condition and say I only want to do it by item code or vendor. Multiple different ways that you can get that allocation feature to function in the system. You're also able to set thresholds in the system. For example, you can say for any invoice less than $100, I do not want to review that invoice for use tax. I'm going to accept what the vendor has charged me and not calculate anything different on that. You can also say for any invoice maybe greater than $25,000, you want to automatically trigger a review. You can also say if the vendor charged you sales tax of $8.25, but Avatax is saying it's $8.26 for 1 penny, I'm not going to worry about accruing a penny on that. Multiple different accruals and thresholds that you can set in the system for both when you're undercharged or overcharged. Now, all these rules are going to feed into our transaction analysis screen here, whether or not these transactions are coming through via a connector or via a batch import file in Excel. The rules will remain the same, and the tax for which we are calculating is going to remain the same, regardless of methodology of how to get your data into the system. Now, like I mentioned earlier, the allocation feature. Now, how does that actually look when I get an invoice from one of my software providers? If you look at the detail in the line items here, you'll see the ship to and ship from address is the same, which is typical for a software provider. You'll then see, oh, I charge tax on it in Ohio, where software as a service is taxable. But in my other states of Indiana, California, and Florida, where I have my users, where it could be subject to use tax, I'm not going to accrue any additional tax because software as a service or electronically downloaded software is non-taxable in those states. Now, if I go back to my analysis menu here, you have a lot of different options you can do here. There's a couple transactions in here, and maybe I want to look at, what do I actually only need to review for the period? If I filter by what I need to review, oh, there's only 2 invoices that I really need to look at because those other invoices, I've assigned some methodology of automation, whether at the vendor invoice level, maybe it's below a threshold that I'm not going to look at it. Really what the needs review status is meant to do is we know how many transactions you folks can be dealing with on use tax on a monthly basis. By assigning that automation on some other transactions, you're able to really focus on those ones that only need your review, and those other transactions we're either auto-accruing or ignoring based on thresholds. If I clear my filter and look at everything again here, let's look at all my invoices. You can then see everything for the period. Say you've reviewed everything and it looks good. You can then go to your actions here. I always recommend to recalculate the tax in case something might have changed or you edited an invoice. And then you can hit accrue tax variance. Once you hit accrue tax variance, if you are a managed returns customer with Avalara, meaning we are filing your sales and use tax returns on your behalf, that use tax amount that is due to that respective state jurisdiction for that current reporting period will automatically go to the use tax line on your return. Non-managed returns customers, you'd also be able to download all the reports from Avalara to get your use tax amounts by state.
All right. So now that we've seen what the Avatax for Accounts Payable platform looks like, why Avatax for Accounts Payable? We've talked about, what use tax is, the complications of it. So what is Avatax for Accounts Payable going to do for us? So really, at the end of the day, the reason we developed Avatax for Accounts Payable is that we know how much of a headache it was for our customers dealing with use tax and how much time they were spending on it on a monthly, quarterly basis. I talked to a company the other day where they were spending an average of 60 hours per month determining their use tax liability via a spreadsheet. That's where AvaTax for accounts payable can come in and help. We're going to connect either to your ERP if we have a certified connector, or we can take that spreadsheet that you're already dealing with, put it into our system. And once you assign those tax rules that you saw in the previous demo, it'll calculate everything for you. And then you'll save a lot more time being able to not analyze use tax on a very, time intensive basis per month. And you can keep those people that are, doing it focused on more value added tax. For example, looking at, big fixed asset expenditures that you want to account for use tax on the front end to make sure the vendor's charging you correctly. You can spend a lot, have your folks that are doing this focus on more value added activities for the company. You're also going to be able to catch those vendor errors before they become your liability. So like we said in the demo, what the system will do is it's going to, one, analyze the sales tax to see if you were undercharged and accrue the additional. We're going to accrue use tax if you weren't charged anything on the invoice. And on top of that, what's really nice is we're also going to tell you where you might be overpaying that sales tax on those invoices. For example, my time in public accounting, I did a lot of reverse audits, and part of a, reverse audit with the public accounting firm is they're going to come in, look at all your your invoices for sales tax and see where they can get those refund opportunities. And then typically take, 25% of the haircut of that tax that you overpaid as their essentially finder's fee for getting that. My last company did this on an annual basis, and they were paying one of their consultants upwards of $130,000 a year in overpaid sales tax by not just identifying, on their end, what needed to be completed and analyzed on the front end so you're not overpaying. This system is going to allow you to do that internally so you can get that tax back, and you're not going to have to pay a third party to manage that function for you. And really at the end of the day, our goal as always is we want to minimize liability and reduce audit exposure on these items. Like I mentioned earlier, use tax is really the big kind of kahuna in an audit when it comes to, what the liability is going to be at the end of the day, especially if you're already using AvaTax on your sales tax calculation on your invoices. You're good to go on that. But the use tax is where there is potential for, underpayment and audit assessment.
All right, Clay. So that's it for today's episode. If consumer use tax felt like a black box before, hopefully it's a little clearer now.
It's one of those areas where doing nothing isn't safe, and doing it manually isn't sustainable. The risk is real, but so is the opportunity to clean it up and reduce exposure.
That's right. And a big thanks to Miles and David for guiding us through the practical side of use tax compliance.
And if you want to dive deeper, the full webinar and more about AvaTax for accounts payable is linked in the show notes. You can also sign up for a use tax health check, which we highly recommend.
And don't forget, everybody, follow or subscribe to Beyond Death and Taxes. We've got more episodes coming up your way soon, including a conversation about global e-invoicing mandates and another trip to Clay's favorite, the compliance graveyard.
Well, it wouldn't be Beyond Death and Taxes without the compliance graveyard, would it? Thanks for listening, and we will catch you next time.